Bills of exchange? What is this? The moment I open a new chapter, there is some or the other new terminology. I know you must be going through this. You are like, how many jargons this accountancy subject have? But don't worry, once you get to know about all this, it become a routine part of your life. Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today I am going to tell you about bills of exchange. Now I know you will be like, you just now got to know about debtors and creditors, right? And again there is a concept called bills receivable and bills payable. Now you will be like, in debtors creditors, you got to know when one party sell the goods on credit to another party, that another party becomes its debtor. Similarly, similar cases with the bills receivable, right? You will be like, then why there is a difference? In bills receivable also we sell the goods on credit, right? Then why that person is considered as a bill receivable account and not debtors, right? This is also called as account receivable, right? So why these debtors are not considered as bills receivable, or bills receivable are not considered as debtors? Don't worry, I am here to solve this confusion. Now in debtors, let's say there is Mr. A who sell the goods on credit to Mr. B. Okay, now usually what happens, the credit term is 30 days, right? Now 30 days is the credit period, and this is based on a mutual consent. It is kind of an informal relationship between two parties, wherein one party know that this particular person will pay me my dues within 30 days. May that credit period be for 15 days, 10 days, 30 days. Okay, but within 30 days, this particular person is going to pay me my dues. But at times, what happens, Mr. B said, I can't pay you in 30 days. I need 2 months of period or a 3 months of period. And Mr. A said, okay, let me get a document signed from you. Okay, now that document mentioned that after 2 months or after 3 months, Mr. B will pay the money to Mr. A. That document is called what? Bill of exchange. Here, when there is a debtor or a creditor relationship, there is no such document. It's a policy of the business wherein the debtor will pay off the money. Whereas in case of bills receivable, what Mr. A will do? Mr. A will prepare a written document wherein he will say that on 5th of Jan 26, I sold goods to Mr. B on credit, and he is liable to pay me my money on, let's say the due period is 2 months, by 5th of March 26, Mr. B will pay me my 20,000 rupees. Okay, so this 20,000 now Mr. B is liable to pay to Mr. A on 5th of March. Here Mr. A will sign this document, and Mr. B will accept this document and do his signature that yes, I accept this bill. I will pay Mr. A 20,000 rupees by 5th of March 2026. Okay, now here we know that when debtor creditor, there are only two parties involved. Here Mr. A is the creditor, wherein Mr. B is the debtor. But when we talk about bills of exchange, there are three parties involved. Okay, let's talk about what becomes Mr. A over here. When Mr. A make this document, he draws this bill. He is known as drawer. Okay, he draw this bill which act as a proof, as a legal evidence. It is more of a formal structure that Mr. B will pay 20,000 to Mr. A at a predetermined date. The date is mentioned over here, 5th March 2026, he will pay me the money. Mr. A draws this bill, he becomes the drawer. Mr. B will accept this bill. He draw the bill, give to Mr. B. Mr. B will accept this bill and make his signature. Here Mr. B will becomes the drawee. He becomes drawee. Now what Mr. A will do? He will retain this bill till it gets mature, till the date of maturity, Mr. B will retain the Mr. A will retain this bill. Now, the first option, he will retain the bill. Okay, here I have mentioned drawer is Mr. A, drawee is Mr. B, right? He retained the bill till the date of maturity. Now, when 5th March comes, he goes to Mr. B, asks for money. Mr. B pays the money to Mr. A, whom he is paying to Mr. A, to his creditor only. So, here in this first case, Mr. A becomes the pay. Okay. Now what happened? Mr. A went to Mr. C. He also purchased certain goods from Mr. C. Now Mr. C, A has to pay money to Mr. C. Now instead of paying the money, what he did, he was having this bill, he gave this bill to Mr. C. What he did, he endorsed the bill. He endorsed the bill. He gave the bill to Mr. C that you go and collect. My amount is due with Mr. B. Instead of I will collect, you go and collect your amount, whatever like the goods I have purchased from you. Instead of paying you the money, you collect this amount from Mr. B on 5th of March 2026. So he endorsed the bill in favor of Mr. C. Now what Mr. C will do? Mr. C will go to Mr. B on 5th of March. He will ask for the money. Here Mr. B will pay money to Mr. C. So in the second case, whom B is paying money to Mr. C. So who is the payee? Mr. C. So this third person becomes the payee to whom Mr. B is paying. But Mr. C said, no, please, I don't want this bill. I want my money. Now Mr. A is not having money. He is like, okay, there is third person who can help me with this. Who is that third party? It is the bank. Bank provide this facility that if you are holding a bill of exchange, come to us, we will provide you that money, right? But we will collect certain charges for it. Let's say 20,000 is due from Mr. B. Mr. A go to the bank, he gave this bill. What the bank person will do? Instead of paying 20,000, they collect certain charges. These are the charges they will collect and pay Mr. A 19,500. Okay, so here what happened? Discounting. Mr. A discounted the bill with the bank. So now what happened? Bank will go to Mr. B. Okay, on 5th of March 2026. Now Mr. B will pay to whom? To the bank. Okay, so here who becomes the payee in the third situation? The bank. Okay, so this is how the three parties are involved. One is the drawer, Mr. A, who sell the goods on credit to Mr. B, get the bill signed, and at the date of maturity, he will go and collect its amount. So when he will go and collect the amount, he is the payee to whom Mr. B will pay. But next situation, he endorsed the bill. He endorsed the bill to his creditor and asked Mr. C to collect the amount from Mr. B. So in the second situation, who is the payee? Mr. C. And in the third situation, when Mr. A discounted the bill through the bank, in that case, bank will go and collect the money from Mr. B and then bank will become the pay. These things are possible when we have a written formal document, right? In this case, there is this written formal document signed and accepted by Mr. B. So Mr. A can endorse the bill, Mr. A can discount the bill. Wherein in the earlier case, in the case of debtors and creditors, this is not possible. You can't endorse, you can't discount the bill. Okay, and the credit period, likewise I said the credit period of debtors is usually 30 days. Okay, whereas in case of bills receivable, it can be 60 days, it can be 90 days, it can be 180 days, it can be more than 1 year. Okay, so bills receivable usually are considered as current assets, but if it is mentioned that it is for more than 1 year, then they are considered as non-current assets. Okay, now we'll go to the definition. So what is bill of exchange? It is a written order. It's a written order binding one party to pay a fixed sum of money to another party. Binding one party, Mr. B, to pay a fixed sum of money to another party. That party could be Mr. A, could be Mr. C, or to the bank on demand or at a predetermined date. If it is mentioned on demand, they will Mr. C will pay it, or Mr. B will pay it on demand, or else at a specific date. If it is mentioned on that particular day, he is legally bound to pay Mr. A money. Okay, so in terms, when we say legally bound, it is more authorized as compared to debtors creditors relationship, right? There's no such legal document wherein one party, they have certain policies, they have certain rules for it, but here there is a written order, there is a written document, right? In Gujarati we said lakhelu vanchai. That means if it is something is written, you can rely on it. It becomes a proof, it becomes an evidence, right? So this is what is bills of exchange. Now it may so happen that this person, Mr. B, is not able to pay the bill, okay, maybe to the bank. So if Mr. B is not able to pay the money to the bank, what happens? The bill of exchange gets dishonored. This you will hear the term bill of exchange dishonored. It got dishonored. Dishonored means Mr. B was not able to pay the money to the party at a specific date. Okay, if it is paying to the bank, okay, if the bank went and it got dishonored, what the bank will do? Bank will collect the same amount of money from Mr. A's account, right? And what will happen to Mr. B? He was considered as bills receivable, but if he fails to pay at a specific date, what happened? He will become account receivable. Account receivable means debtor. Mr. B will become debtor of Mr. A. Okay, and Mr. A is going to charge. It is mentioned in that particular document that if Mr. B is not able to pay the money at a specific date, he will charge certain extra amount. Let's say he was liable to pay 20,000 rupees, he will charge 2,000 extra, and now Mr. B is liable to pay to Mr. A 22,000 rupees. Okay, so he will become the debtor. Bills receivable will become a debtor. I hope now you got to know the meaning of bill of exchange. What is the difference between bills receivable and bills payable? Okay, bills receivable and bills payable. What do you mean by debtors and creditors, and how does debtors differ from bills receivable and how creditors differ from bills payable? Two parties in debtors and creditors, three parties in case of bills of exchange: drawer, drawee, and payee, and that's it. It's easy, right? Thank you very much. If you face any difficulties, do let me know.